Let's welcome in our next guest. We have Shilan Shah, India economist at Capital Economics, joining us from Singapore. Shilan, thanks so much for joining us on NDTV Profit. You've come out with your report on the outlook for growth in India, and you're sounding very optimistic. You're saying that growth in India should accelerate. This is sounding a little different from a few other economists we've spoken to. They remain a little more cautious, especially because they are seeing the demonetization impact continue in the first half of the year. What kind of growth rate are you penciling in? And given that the announcement of elections for a number of states in India has been made, could we see a slowdown in the reform process?
Yeah, so we think that we'll see an acceleration in growth throughout the year in 2017. So the government's demonetization measures did lead to a slowdown in growth at the end of 2016, we think, and this has been shown in a number of activity indicators such as the manufacturing PMIs and things like car sales and vehicle sales as well. Now, we think some of this weakness will continue into 2017 while the cash shortages continue. But as the new cash slowly becomes more widely available and perhaps more people switch towards digital payments, and also postponed spending comes back online, we think that growth will accelerate throughout the year. And all in all, we think that growth will average something around 6.3 to 6.5%, which is probably weaker than the official GDP data would suggest, but nonetheless, it's still an improvement on growth from last year. In terms of your point about the reform process, yes, we agree. I think that's a very realistic possibility. So we saw a certain build-up of momentum in the reform process in 2016 with the passage of the bankruptcy code and then also the long-awaited goods and services tax. However, with these state elections now on the horizon, including in UP, which is India's most economically important state, we do think that politically difficult measures, such as on labour and land reforms, may be shelved for the time being. So investors may be somewhat disappointed with the reform process over the next 6 months or so.
Right, Shilan, how much do you think has been the impact of the demonetization on growth? Any numbers that you've penciled in? And for this year, FY 17-18, do you think the growth is going to be, backdated? The first half will be weak, and the second half will be better.
Yeah, that's right. So in terms of the exact impact, obviously it's very difficult to tell at the moment. There's only a limited amount of data available, but based on what we do have, I think a fair assumption to make is that the impact has been sizable, if not completely catastrophic. So we're factoring in perhaps a 1 percentage point decline in growth as a direct result of demonetization in the last quarter of 2016, which is Q3 for 2016-2017 fiscal year. So the impact on the kind of full year growth would be would knock off around 0.3 percentage points across the year. So, leaving aside the official GDP numbers, which are obviously treated with a great deal of skepticism, we think that growth probably averaged around 5.7% in 2016. And as you mentioned, we think that we'll see, as I sort of mentioned earlier as well, we think that we'll see a pickup in growth in the second half of the year. We think that growth would average around 6.3%. I should also add that there are a number of other factors beyond just the rebound from demonetization, which should support growth over the coming months. We've obviously seen a number of commercial banks lower their lending rates in the past few days. That should help to support a pickup in investment. And also there's been a very strong rise in FDI inflows over the past few months, and we think that this will continue as well. And again, this should help to support growth. And so we think that growth should average around 6.3% in 2017.
All right. 6.3%. What will it take for the growth to get here? What is working in India's favor? So far, we see lower commodity prices. They seem to be going up. We've seen foreign inflows very steady. We've seen a reversal of at least FPI inflows starting November. What is going to work in India's favor? Because, the capex, private capex is not taking off in India. And we've been waiting for that strong growth for the last 2 years now. It hasn't come about. What's going to change this year that you think in the second half we'll see stronger growth?
So as I mentioned, at the margins, we've seen banks lower their lending rates, although they're still high and could potentially be brought down lower at the margins at least. This should help to spur some kind of demand and lead to a slight pickup in investment over the coming months. We also have the potential rebound from the effect of demonetization as the new currency becomes more widely available. Then spending that had been postponed at the end of 2016 and in the beginning of this year should come back online towards the middle and end of this year. So again, so these are some important factors that should help to boost growth, and FDI as well. A number of restrictions on foreign investment into India have been lifted under the Modi government, and again, this should have a continued impact on growth over the coming months.
Right. You said that the banks have lower interest, but you see more room for lower rates. Where is this optimism coming from? Is it because of the delusion deposits, which will reverse? There's a good chance it will reverse once the cash withdrawal limits are lifted. So where do you see the scope for lower rates? Because the RBI still remains hawkish in its last policy. Said we are watching what happens when it comes to fiscal policy in the US. We're watching commodity rates. We're not too sure where inflation is headed. There could be some upside risk. So where is this optimism of lower cost of capital coming in?
Well, I think there's an important distinction to be made here. And we're not necessarily talking about lower policy rates directly from the RBI. Now, it could be argued that the RBI was actually front-loading its rate cuts when it cut rates in October 2016. The important point to be made is that the way that the monetary transmission mechanism works is that there's obviously a lagged impact on bank lending rates. Now, this is obviously, as you mentioned, been helped as well by the rush of cash into the banking sector. But some of it is also to do with banks' marginal cost of funding, which has come down in the past 6 months or so. Now, gradually, this should lead to slightly lower lending rates. We don't necessarily see any more scope for lower policy rates. In fact, if anything, demonetization may boost inflation over the coming months if it leads to supply disruptions, even as demand recovers. And so we might even see a hike to policy rates, official policy rates, before the end of the year. But in terms of bank lending rates, which is more likely to have an impact on the real economy, we could see them just edging down slightly over the coming months.
Sorry, did you say you could see a policy rate hike sometime this year?
Yeah, towards the end of the year. I don't think. I mean, I admit that it's a very non-consensus view. However, we do see scope for inflation picking up as a result of the demonetization affecting the supply side of the economy. So we could see inflation picking up. We also have rising commodity prices, which should boost inflation as well. So we do see scope for perhaps a small rate hike towards the end of the year.
Right. What's your prediction for inflation then? Because demonetization has definitely hit demand output, so inflation is expected to soften in the very near term. Where do you see the inflation trajectory, and what will be the consequent impact on the fiscal deficit and the room that the government has to spend?
Well, again, as I sort of touched upon in terms of our views on growth, we think that demonetization is going to lead to weaker growth in the first half of the year and then a subsequent pickup in growth later on. And I think we could probably see a similar impact in terms of inflation as well. So although it will help to keep inflation anchored in the first few months of the year, if it does lead to supply disruptions, for instance, there've been reports that farmers in many rural areas have actually struggled to purchase seeds and fertilizer, which could harm the sowing ahead of the winter season. So that could lead to a pickup in food prices towards the end of the year. If these supply disruptions prove to be correct, then we could see a pickup in inflation towards the second half of the year, which again, as I sort of mentioned, could lead to a very small rate hike.
All right. What about the fiscal deficit? What do you think the government will stay the course when it comes out with this budget this year? And what are you expecting from the budget this year?
So the Finance Ministry over the past couple of years has seemed very determined to rein in the fiscal deficit in order to keep a lid on India's debt to GDP ratio. Now, we don't think this is going to change. We do think that overall the fiscal position should tighten in the next fiscal. However, there has been an added boon, I guess you could say, from the government's tax amnesty and also potential revenues raised from the demonetization measures as well. So this actually should help the government to increase spending whilst also maintaining its fiscal its commitment to reining in the fiscal deficit. So we might see a slight pickup in growth as a result of greater government spending without the government having to actually without it being at risk of missing its fiscal deficit targets.
What are your expectations as far as reforms or even welfare schemes coming into the budget? Do you expect some big announcements coming through? Because the Prime Minister on New Year's Eve has already announced some stops for lower cost housing. What more can we expect from the budget?
I guess it's difficult to be sure. I think we'll have a little bit more clarity given on the rollout date of the GST. We think that the April 2017 deadline is all but likely to be missed, but there might be some more clarity given, and we still think it's likely that the rollout of the GST will be towards the end of the year. We expect more information to be given on this during the budget. As you mentioned, there have been some policies, importantly ahead of the state elections regarding lower cost housing as well. If we are to see, depending on the government's own forecast for commodity prices, subsidy costs may well rise as well. However, I think the key point is that it has received this added boon from the tax amnesty and also from demonetization. This could lead to slightly more infrastructure spending than has previously been expected, but at the same time, the Finance Ministry should be keen to rein in its fiscal deficit.
All right. You don't think that the fiscal deficit course will change? The government will be quite focused on this. What we wanted to understand is that what are you seeing by way of corporate growth earnings? You expect the growth momentum to pick up. But when it comes to corporate growth earnings, what can we expect? Are you looking at corporate earnings growing 10-15% in FY18?
I mean, it's difficult to put an exact number on it. You would expect that the impact from demonetization will affect corporate earnings at least at the margins. This works in two ways. One is that the cash shortages have obviously led to lower spending, and there's also been wide-scale reports of employers being unable to actually pay their employees as well, which has lowered household earnings, and then that would subsequently impact corporate earnings. So in the same way that we see a weaker growth in the first half of the year and then a rebound towards the latter half of 2017, I guess we could expect a similar trajectory for corporate earnings as well.
Right. What's your view on the capital requirements for banks? Now, because of demonetization and the cash crunch, banks were in the third quarter largely doing only exchange of notes, and their businesses suffered. Credit growth in any case wasn't really strong, and reflective of the growth not really taking off. Now, what happens? Because you're not getting growth. Rates are lower. So do you think there'll be more refinancing happening? Will their NPA positions improve? What then happens to their capital requirements of PSU banks that have large NPAs, and it impacts their profitability?
Yeah, I think this year could be quite a critical year in terms of the banking sector. Actually, now, in terms of the demonetization impact, obviously the RBI announced a number of liquidity draining measures as well. So I think that will have an impact on balance sheets. I think the key thing though is how much actual demand there is for credit. So although lending costs have fallen, it's dependent on the amount of demand that there is for credit. We do think that at the margins we'll see a slight pickup in lending growth over the coming months, which should support growth more generally. And there might even be scope for the government to announce slightly greater recapitalizations of the banking sector, which again should help to improve balance sheets as well.
All right. What do you think the government will have to keep aside for recapitalization of banks for this financial year?
It's difficult again to put an exact number on it. Some estimates estimates vary, but roughly speaking, it's estimated that banks will need around $40 billion over the next 2 years or so, for recapitalization. I don't think the government will be particularly close to actually being able to reach that mark, even with its added revenue boons from the tax amnesty and demonetization. So we might see slightly more announced in terms of recapitalizing the banks, but probably not enough for it to to put it on a much more secure footing.
Right. Do you think that some of the corporates have pricing power returning to them? Like we've seen some price hikes announced by steel companies. There is excess capacity in a large number of industries, be it cement or maybe even steel. But do you think that there could be a time this year that pricing power will come back to some of the corporates and we could see a revival of private capex, or is that still some time away?
No, I think there's reason to be mildly optimistic. I think over a return to private capital expenditure. Again, this is more to do with movements in terms of the policy front, though. Banks have very gradually brought down their lending rates, which should at the margins help to spur some kind of demand, and that could feed through into greater capital expenditure. In terms of specific policies for local commodity companies, I'm not sure I'm best placed to answer anything on that.
All right, Shilan, thank you so much for speaking with us at NDTV Profit, giving us your views on where you see economic growth in India coming up for this financial year. Thank you so much for speaking with us. So, Shilan, of the view that growth should accelerate perhaps in the second half of this financial year.